On December 5th, 2023, the Nigeria Interbank Settlement System, NIBBS, sent a circular and asked for switches, super agents, and payment solution service providers to be disconnected from the NIBSS Instant Outward Payment System, now NIBBS, as it's also known, noted that these companies are non-deposit taking financial institutions and by implication should not hold customers' funds. On the list of companies which are alleged to have contravened this policy were many major fintech companies in the payments space. Babatunde Obadero, MD and CEO Zitra Investment, joins me now to look at this development and what it could mean for financial inclusion as well as the customers of these fintechs. Babatunde, welcome to Business Edge. Thank you so much for joining me.
Thank you very much for having me here this morning.
So let's look at the rationale behind this directive that's coming from, of course, the Nigerian Interbank Payment Settlement System, and that's about these companies being interesting types of companies, as it would be. Let me get it for you there, that they are non-deposit taking financial institutions. So yes. First of all, take us through that, and then let's look at the rationale for this.
So first things first, I'd like to say that this is not necessarily a new directive. So it was piggybacking on a 2014 set of guidelines that the central bank had sent on this set of institutions, which was reinforced again in 2018 when it was given a directive to what is called the PSSP. So it's not necessarily new. But what has happened in that time is that we've had a lot more fintechs who, of course, as would expect, are looking for ways to see how they can meet their customers' needs. So let's backtrack again and speak to what has just happened. So the directive was specifically targeted at what is called the outward system for those institutions. Now, what that implies is if I pick up my phone and I want to do a transfer from my bank to any of these particular institutions, I shouldn't see them on my bank's mobile app. That's, if I want to keep it simple and stupid, right? That's exactly what this entails. Now, so it doesn't stop those particular institutions from initiating transactions from their end to other banks. And which institutions are we talking about? So that, because one of the things that we've also seen that has happened over the last few days is that there was a lot of chaos online. A lot of chaos online, and people were calling all sorts of institutions that were not even relevant to the subject. So first things first is that this does not include banks. These restrictions has nothing to do with banks. And by banks, I'm speaking to commercial banks, mortgage banks, or microfinance banks. What
we understand to be traditional financial institutions, basically, in the sense of it.
But also, a lot of fintechs have banking licenses. You know, so a lot of people don't realize that fintechs also have I don't know how to call names here, of course, but a lot of fintechs have banking licenses. Also, the restrictions does not affect what we call the MMOs, mobile money operators. It doesn't affect what is called the PSBs, the service banks, the new service banks. Some of the telcos have those licenses. So the restriction is limited to 3 major types of entities. 1, super agents. 2, PSSPs. And 3, other non-deposit financial institutions. Now, what do we mean by non-deposit financial institutions? A non-deposit financial institution is an institution that has a CBN license that restricts it from accepting customer deposits. So what it means is, in order to operate as an entity, you do not generate customer-related liability. Now, there are reasons why this is the case. The CBN fails, or the CBN, by its statutes, by its operations, is responsible for ensuring that customers' deposits are protected, hence the NDIC.
Yeah.
Right? So all of these institutions we've described that have these restrictions and limitations do not have access to the NDIC insurance cover that provides protection for depositors across banks.
So, but then doesn't that make it a question of why the CBN has not either changed the NDIC regulation to be able to include these type of financial institutions, as popular as they are, or why it's not part of the licensing requirements for these financial institutions? Because many are saying the fintechs, while they may be the ones in the spotlight right now, are not the real culprits, but it's actually the banks. because Nigerian banking is under stress, and we hear these huge profits declared yearly. We're soon going to see some of that very soon. But Nigerian banking system is not really providing the services for the customers that the customers in Nigeria truly need. And what you end up having is that people are going to these fintechs, to these alternative sources, because they're getting from them what they're possibly not getting from traditional banks. So isn't it for traditional banks to change their methods as well?
Look, CBN or the NIBSS issues several circulars every year. We've just created a lot of noise around this particular one. In my opinion, this was much ado about nothing. The circular, I don't know for what purpose it was serving in the public space, but the circular was specifically targeted at the banks. The people who received the circular were banks. Now, and of course, all the CBN expects to do, or NIBSS expected the banks to do, is to make the changes on their platforms to accommodate what the instructions they gave was. What you said about banks and making money and all of that. Look, the reality is that, and as somebody who is responsible for driving business in a fintech, as myself, the reality is that our numbers as a category of businesses is still quite small compared to what the banks are doing in terms of volumes, in terms of loans, in terms of what have you. Maybe the extent of our strength is in our ability to innovate, our ability to be flexible, not to quickly drive change and all that. But in the context of this rule, I would like to say, look, there's a lot of noise about something that isn't very much of a big deal. These institutions, don't forget, can still send money out to their customers or to the channels that they've already been sending money through. So this doesn't stop them from their businesses in any way or shape or form. It only tells them, look, you cannot hold deposits, which if you pay attention as well, is not a unique trend. It's not a unique thing in Nigeria. It's a global trend as well.
Yeah.
And the CBN is just making sure that the Nigerian banking business landscape isn't taken advantage of by what you will call unscrupulous elements. But I think, by and large, it's fair game.
Okay, so in terms of not being able to hold deposits, as you said, this is asking for the banks to basically take these companies that fit into these categories off of their apps. So I wake up as a Nigerian, I have an account with one of these fintechs, I want to send money from maybe my traditional banking account to this account, and all of a sudden the choice or the selection is gone from the drop down. So I'm definitely going to be on social media asking questions, and then as you said, there's been noise for a few days, and it's going to make me feel like, okay, where's my money? What am I doing? I've opened an account in this place. So we really need to clarify it for the Nigerian fintech customer as it is right now. So what about the impact on the affected financial customers, not necessarily the institutions? Because does that now mean so they can't hold money? You need to tell me what happens to my money that's currently with these fintechs.
So without acting like I'm the spokesperson for those fintechs, the reality is that there are other ways for moving monies that is not limited to the
banking
NIBSS instant platform. The NIP platform just enables instant transfers. I can do the same things that are card-based or that may not be instant. So they have other options so that we don't think that this is it. Yes, NIP has come to be all and do all because of its effectiveness, because of the speed of delivery, but there are other options. So my guess is that part of what would have happened in the last 7 days since this came out is that those other entities would have provided their customers with other facilities or other options. But I think it's important to address the fact that, look, there is absolutely no reason for panic. This rule or this circular is not necessarily stopping you from accessing your money or moving your funds around as you need it or when you need it. It's just to redirect those entities to know that, look, you are not deposit money banks, therefore you cannot hold deposits and you cannot treat your clients, customers like a bank will treat it. And other than that, it's, in my opinion, business as usual.
So business as usual, something you said, much ado about nothing. But in terms of financial inclusion, and we've seen how fintechs have helped the financial inclusion gap to close in Nigeria. Do you think this will have any impact on financial inclusion? As you said, it's not a Nigerian thing. It's a global trend. It's happened in India. There's been conversations and similar things that also happened as well as in Kenya, and we know how big Kenya is with the fintech space. But in terms of financial inclusion for us, what's the impact? Because these fintechs have really been able to close a gap that has existed for decades.
Very fair point there. And look, the fintechs have a huge role to play in addressing issues around financial inclusion. I dare say it's the reason why many of the fintechs that I know, including ours, have ensured that you go a long way to ensure you get a banking license. Now, because that helps you to meet the needs of your clients as you should. Look, I am very sure of one thing, that the central bank understands its importance, the importance of the financial technology companies in delivering its own emphasis on financial inclusion. The financial inclusion drive is not, the reality is that there are so many things that the banks can't go down and low enough in the financial value chain like the fintechs can. The banks may not have the cost profile or the need to address those bottom, what do you call, typical bottom of the pyramid customers like the fintechs can. And so I do not think that this shifts that attention. I just think that this says treat it differently, focus on preserving their funds because you know that they do not have the NDIC cover for those entities, and ensure that the entities that have the necessary regulatory cover, the necessary licensing regime adhere to those standards, and then you can, that would not in any way or form change the narrative, in my opinion, with regards to financial inclusion. Some of the firms that have had the largest impact in terms of, let's go back to, for instance, February 2023 to April or thereabouts, when we had the serious crisis around cash and all that. Some of those entities that literally got a large pie of the cake, if I may use that reference, at that time in the financial service space, are fintechs. And this has not in any way changed their ability to serve their customers or continue to increase their market share within the banking system.
So let me come back to something that's, of course, having to do with the NDIC and even competition and innovation. There are many people who believe that there's some form of protection that happens for traditional banks and traditional financial institutions. Meanwhile, fintechs come and they will innovate products, they will innovate access, they'll innovate the financial inclusion gap, find ways to bridge that gap for the country. Is this also not, one, a call for traditional financial institutions to do more? Many have said, of course, as I said earlier, they're not giving the Nigerian consumer and the customer what the Nigerian customer wants. You're gathering money and holding money, and you're declaring large profits at the end of the day, but people want interest-based banking. They want to know that they can walk into their bank, be able to finance a house, finance buying land, finance education, and many Nigerians actually struggle to do that. And the fintechs have stepped into that small gap as well. So one, is this not a call for traditional financial institutions to also be more innovative? And secondly, is this not a call for even fintechs to look at some of the traditional things? Is there a way for a fintech to get an NDIC license so that it can continue to hold customers' funds as this is an issue right now?
Yep. So clearly, that is a direct call to any fintech that wants to play in the deposit mobilizing space to, of course, get the required licenses. On the traditional banks, look, banking is banking is banking. It has never changed. It will never change. So for those traditional banks, it's simple and short for them. How best can they optimize returns or revenue? That's all that it's about. And some of the things that we're looking for in terms of providing more access to finance for people, in terms of mortgage, in terms of businesses, may not necessarily come by patting the banks on the back and rubbing their shoulders. Might need to have serious government interventions. Look, let's go back to the United States, for instance. What today became the significant push that the U.S. had in the 1930s and 40s with regards to real estate. It came by government intervention. You would hear about there are two major government agencies that pushed the bar. They pushed the curtain on in terms of real estate. It was government driven. So a lot of those things that we're looking for, because hey, if I am responsible for a bank today and I have my traditional sources of revenue, why do I want to tip the scale and go for something I'm not sure of? Especially in this climate where by the time when rates are up, there is not sufficient incentives to take more risks that you do not need. So a part of that job will probably come from the regulator, empowered by the government, of course, pushing for the kind of change it wants to see as far as the monetary policy direction is concerned. And look, banks are just like any other entity, supposed to be interested in optimizing value, optimizing returns for stakeholders. So there has to be another reason for them to go out of their way to do the things that we're clamoring for. They lend. The banks still lend, whether we like it or not. But they may not be lending the way we want them to lend. But their decision to lend the way they want to lend is fueled by their interests, first and foremost, not ours. And so for the fintechs, this presents an opportunity for fintechs to come in. But you and I understand that the capital at play for fintechs is a lot lower, smaller than what the traditional banks have. So these things take time. And I'm sure that as we continue to have more fintechs come into play, especially where fintechs can, I see a world in the future where a lot of the fintechs we have at play in Nigeria today come together. I see a world where some of these fintechs can become, in their own sense, as big as one or two traditional banks. And then you can come and make a bigger impact based on the ability to lend more and your capital capacity to play in the game as well.
All right, Babatunde, before I let you go, let's look at Nigeria's banks. Do you think they're under stress? Because right now we have heard that there is potential for recapitalization to be happening in the new year as well. When you look at what the fintechs are able to do, fintechs have figured out how to aggregate users and capture value. And that's something that's been a bit difficult for a more traditional financial institution, which is a bit more wieldy and cumbersome to deal with. So a lot of people think that Nigeria's banks are a bit stressed. There's this competition and innovation with fintechs. There's the requirements from the CBN on this side as well. And of course, things are just generally very difficult right now in the Nigerian economy. Do you think Nigerian banks are stressed? So
simple and short answer, the banking system is not stressed. The central bank from time to time runs stress tests on our banks. And there has been no trend or no signs of any stress in our ecosystem, in our banking ecosystem. Now, but we are aware that a few weeks back, the central bank governor hinted us as to the direction of where they're taking the banking system to with regards to mergers, or at least the need for mergers. He has stated clearly that the capital-based requirements for banks will go
increase
up. Yes, and what that implies is banks would have to either seek out fresh capital or seek out opportunities to merge or acquire smaller banks. Now, that's never a bad thing. I take my mind back to the last merger, consolidation exercise, so to say. And it left our banks in a better place. It's the reason why a lot of our banks didn't suffer what they could have suffered with the last economic setback we had. Now, but of course, it comes with a drawback. And that's one of the things I hope that the banks will pay attention to this time. There was a lot of job losses last time out, and a lot of families were thrown into despair. And I'm hoping that this time, as we embark on another consolidation exercise, or at least what I think might be a consolidation of some sort, it's important that banks pay attention to the human elements that we would need to address in the coming days. But to my mind, and from all numbers available to us, the banking industry is as strong as it should be at this time.
All right, so I think that's some good news for people to take away on a Monday morning. Babatunde Obadero, MD and CEO of Zitra Investment, thank you so much for joining me and giving us some enlightenment on this situation. I hope it has tempered some of the initial furor, especially what we've seen on social media in regards to this situation and fintechs in Nigeria. Thank you so much.
Thank you. Thank you very much.
All right, you're watching Business Edge right here on News Central. We'll take a quick time out. We have international business headlines coming up, and right after that, we're in COP28 and looking at Africa's industrialization agenda, and of course the Nairobi Declaration and many other issues surrounding that. Stay with us.